What's up guys, Roger here with Vantage Realty and Home Loans, and for those of you who don't know, I just got my licensing in Arizona. So if you're looking to buy or refinance your property in California or Arizona, you can let me know by scheduling a call on the link below. So anyway, let's get right into it. Today's video, we're going to talk about a home loan for business owners. So whether you are looking to buy and you're a business owner, or you already own and you're looking to refinance, take out some cash because you probably have a ton of equity because values have gone up so much in the past year, this video is for you. So whether you own a car wash, gas station, you're a real estate agent, you're an insurance agent, you do solar sales, you own a restaurant, coffee shop, any kind of independent contractor, if you have a LLC, S corporation, any kind of business owner or independent contractor, this program is for you. So basically, if you're not getting a W-2 paycheck, this is a program that you can take advantage of to buy a house in 2022 or refinance in 2022. One of the main driving factors for this program, first of all, it's called the bank statement loan, because essentially they're going to go off the bank statement deposits. So again, regardless of what industry you're in, if you're self-employed, they'll take your deposits in your business bank account or personal bank account. You know, there's some independent contractors that get paid into their personal bank account, so that's okay as well. So personal bank statements, business bank statements, both are okay. The bank is going to look at the deposits in your bank account, and that is going to be your income. Depending on the type of industry you're in, the bank will take a percentage of your deposits. So for example, I had a client who is an editor, right? So he works on TV shows and he edits videos. So being a business owner who edits videos, you have very low overhead, right? So you have your software and that's it, right? You work from home, you don't have to pay rent, you don't have employees. So essentially, the bank will take 90% of your deposits. So if you're depositing $20,000 a month, they'll take 90% of that. You will be qualified as having $18,000 a month in income. So very, very cool. The problem is most business owners write everything off at the end of the year, right? So even though you're really making a lot of money, you write everything off, you don't pay a lot of taxes, you don't qualify for a conventional loan. That's why you would go for this type of loan instead. If you're an editor, right? So if you're an editor, the bank will give you 90% of your deposits. Now let's say someone like me, okay, I own a real estate company, right? I have real estate agents that work for me, loan officers that work for me. We have more expenses. We have insurance, rent, we have to pay to pull credit reports, things like that. Or for example, if you own a car wash, if you own a restaurant, right? The bank's not going to give you 90% of your deposits. So for those types of businesses like myself, restaurants, businesses with higher overhead, the bank will usually give you 50% of your deposits as income. So again, they'll take your last 12 months of bank statements, add up the deposits, divided by 12 to get an average, and then give you a percentage of those deposits as your income. Okay, so you could go from 12 to 24 months of bank statements. If you do 24 months of bank statements, if you've been in business a long time and COVID hasn't affected you, then you get a little bit of a better rate. Okay, so I'm going to go down the list depending on your credit score, the loan amounts, interest rates, and so on. This is as of today. Interest rates can change. These interest rates don't change very often, but again, just to disclose, if you're watching this video in the middle or end of 2022, interest rates might be a little bit different. So if you have excellent credit score, 740 or above, you can do a bank statement loan with only 10% down up to $2 million. So essentially, you can buy a house that's a price of $2.2 million, put 10%, as long as your loan amount is under $2 million, you could do just 10% down. Pretty awesome. And again, one thing to mention with all of these rates that I'm going to quote you, none of them have mortgage insurance. Okay, so if you know anything about mortgages and home loans, if you ever put less than 20%, you usually have mortgage insurance, which is an additional fee on top of your interest rate. But these rates include mortgage insurance. So there's no additional mortgage insurance fee. You have a 740 credit score or above, you're putting 10% down up to $2 million loan amount. Your interest rate would be 4.6%. That would be no cost, no additional origination or points, or you could do 4.3% and pay 1 point. Okay, so 1 point is 1% of the loan. So if you had $1 million loan and you paid 1 point, that would be $10,000. Okay, so the rate's going to be between 4.3 and 4.6. And again, some people might look at this and say, oh, rates are like 3.25 right now, 3%. Well, hey, you're not paying taxes. Okay, so you can't have your cake and eat it too. Sorry, guys. If you're a business owner and you write everything off, you don't pay a lot of taxes, you have a low net income, you're not going to qualify for a mortgage. So this is better than nothing. And if you look at the percentage of appreciation on homes right now, homes are increasing by 15 to 20% projected in 2022. Last year, Phoenix area where I live in South Phoenix, homes appreciated 25-30%. So in the big picture, in the big scheme of things, paying a 4.3 or 4.6% interest rate, when you have an asset appreciating at 20%, is nothing. It's not, it's a no-brainer. So let's say your credit score is a little bit lower, right? Let's say your credit score is between 700 and 739. Right, so it's a little bit lower. You could still do 10% down, but the maximum loan amount now becomes 1.5 million. Okay, so you can't go to 2 million. The maximum is now 1.5 million. Okay, so that's if your credit score is 700 to 739. Rates are a little bit higher. So if you want a no cost, no points, your interest rate is going to be 5%. Okay, again, it includes mortgage insurance, nothing additional for that. 5% interest rate. If you want to pay 1 point, like 1% origination, your interest rate would be 4.6. Okay, so you're looking at 4.6 to 5%, depending on how many points you want to pay. Now, let's say your credit score is even lower. Let's say your credit score is 680 to 699. So you're one tier below. You can still go to 1.5 million, but now you have to do 15% down. Okay, so you don't have the option of doing 10% down versus if you had a 700 credit score or above. Okay, so if your score is under 700, you have to do 15% down. The maximum loan amount is 1.5 million, and the interest rate, if you want no points, is going to be 5.7. If you're willing to pay 1 point, the interest rate will be 5.3. So I know I spat a lot of numbers at you. Feel free to rewind or rewatch just to double check what the interest rates are based on your scenario, based on your credit score. But guys, if you have a low credit score, you gotta work on it. That's one of the first things if you're buying a house, you gotta work on your credit score. You know, if you have questions, you can always email me. My email is in the description. How can I raise my credit score? This is my situation. You know, I might have to pull your credit to look at it and give you advice, but essentially you wanna have no late payments. Don't use more than 30% of your available balance, and don't close credit cards. That's one of the biggest mistakes I see people do is they close credit cards. Closing a credit card is devastating to your credit score because it looks like you can't handle credit. You look like you can't handle credit. You're closing credit cards. Then you're going to a bank and say, hey, I want $500,000, I want $1 million to buy a house. Doesn't look good. Went on a little bit of a tangent on credit scores, but you guys should be able to get your credit score to 740 above to get the best rate. It doesn't even matter if you're getting the bank statement loan, any loan. You want the better your credit score, the better your interest rate, the less fees. So you should always be mindful of your credit score. So what are some other requirements for this bank statement program? All right, so number one, in addition to your down payment, you need reserves, okay? So basically whatever your monthly mortgage payment is gonna be, your projected monthly payment, the bank wants you to have at least 6 months in reserves. So it could be in a checking, savings, retirement, stocks, could be in any one of those accounts. You don't have to give that money to anyone. You just have to show the bank, hey, in case my business slows down, I have extra cash to make my mortgage payments. So you got to have 6 months of reserves minimum. It might be more depending on the scenario. So another requirement of this program is going to be a CPA letter. So a letter from your accountant that says what percentage of the business that you own. So if you're 100% owner, you need your CPA to basically say, Roger is 100% owner of Vantage Realty Inc. or is 50% owner of Vantage Realty Inc. So whatever the percentage that you own, the bank will take that percentage of the deposits. So if you're not 100% owner, let's say you're 50% owner of a business, you have a partner and you guys are video editors, you guys own a business together. Taking the same scenario we were talking about earlier, let's say you have $20,000 a month in deposits, the bank's gonna take 90% of that number, so the bank's gonna give you $18,000 a month in income. But if you're 50% owner of the business, the bank will give you 50% of the $18,000. So your income will be $9,000. Okay, so you're gonna need a CPA letter. So hopefully you're on good terms with your accountant. He's pretty cool and will just write you that letter. Again, as long as it's legit, should not be a problem. That's it, guys. That is the majority of the information for a bank statement loan. So again, if you guys found this video valuable, leave a thumbs up, subscribe to the channel. This is your best bet. If you're a business owner to buy a house in 2022, the market is still very, very crazy, very, very hot. You want to get in sooner rather than later to get some of that appreciation. Again, my link is in the bio too. If you guys have any questions specifically, you can always schedule a call with me, send me an email. I always look forward to hearing from you guys, or just leave a question in the chat box below. Thank you guys so much for watching, and I'll see you guys on the next one.